that's something is
Maybe
going to
that's
be
something that was getting digested yesterday.
getting digested.
But Kunal is here in the studios. Kunal, hi, morning. We've got a domestic event, the Bihar election verdict. Could turn volatile perhaps, but just the fact that the way we panned out yesterday, what's the screen telling you? And to add to that, the global weakness this morning.
Yeah, I think the reason for markets, the GIFT Nifty showing signs of weakness is on the back of global weakness. But then I think I'll take it this way, that this is a third attempt towards 26,000 mark. The sector breadth was a lot more better this time around. But then I think based on what's happened across the globe, you're seeing some bit of an ebb off. I don't see it as of now a reversal of sorts for the index, maybe a retest back towards 25,500 levels and then an attempt back towards 26,000 mark. That's broadly. And to add to the fact that we were expecting the markets to be a little bit more volatile based on the verdict on the elections event. So maybe that could also be playing out today. But I think net if we don't break those key certain support levels on the index, say by the end of the day today, that's closer to 25,750 mark, which is the midpoint of the range for the Nifty. So if we don't break below this level, then I believe net we should be looking at the markets bouncing back hopefully next week.
Kunal, but how do you trade on such a volatile deal, especially on a day when we have voting results coming in? The exit poll is anyway saying that NDA will come back to power, but there is global volatility and the domestic event which is in place. So how should an investor look at the entire play?
See, I think purely prior to the event, whether it's specifically it's a big event, whether it's the general elections which was there in the previous year or whether it's the normal state elections, we generally tend to reduce the positions one day prior because these are uncertain events. Given the exit poll, that doesn't mean necessarily that the event will play out in the same manner. There will be some bit of volatility which could happen on the markets, and that volatility is something which you want to shy away because it doesn't move on to random. It moves on to random kind of price movement. It doesn't move on to those pure supply and demand characteristics which you look out for in the pure technical parlance. So one day prior to the event is generally where we try to ebb off the positions, reduce the positions, move to more low beta or slightly defensive stocks. Once the event is out of the way and the markets come back into maybe some bit of a stability, we go back into the routine in terms of picking up stocks.
So hit 26K and then eased off from there. But also earnings. That also is something that the street is constantly having to digest. Once again, it was earnings specific yesterday too. And I guess today also will be the same case, starting off with Hero MotoCorp, though decent numbers.
Yeah, if you look at the common theme coming through all this thing is that consumption is still a struggle for many of the companies, whether it's Hero, whether it's Eicher, whether it's Jubilant FoodWorks or P&G Industries. Consumption is still a struggle. Of course, the GST cut happened towards the end of September, so that's a little boost. But everyone is circumspect whether the kind of demand or the volume growth which they have seen can be taken forward into the second half of the financial year, and that is going to be a key concern for the market. There, P&G Industries numbers were okay, but again they had an issue with respect to the kind of growth they have done. Eicher Motors saw volume growth happening towards the lower end of its portfolio, so the product mix was weak in that sense, and they are expecting that this is expected to continue in the second half, despite the fact that they are going to have a capex coming in which will raise the output to 1.36 lakh units per month. So that's something which is there. Jubilant FoodWorks, great numbers. The volume growth has been double digit there, but at the cost of margins which have come in. And while the street may be happy because if you compare them with any other QSR chain, they've been doing much better, but they've decided to go for market share at the cost of margins. So that's something which is to be looked at.
But Citi looks at that strategy positively. Because what they're saying is, in an industry itself which is seeing weakness, it's a great strategy to go after market share.
True.
You're doing 5-7% like-for-like growth, which is not bad at all.
The problem with that strategy is that when the consumption comes back, you will not be able to raise prices easily. And at that point in time, this becomes Achilles heel for you, and you're stuck there.
And definitely for the category that Jubilant
serves, basically.
Very price conscious.
Very price conscious, which is there. So while in the bad time it is good because you're beating all other QSR companies, but when the tide turns, it will be difficult for you to push the prices higher.
But why that commentary stands out for me? Because most QSR companies in general, and I know I'm pushing QSR today, but just try to complete that. It's because most of the other QSR companies are not even reasonably profitable. They struggle with profitability. Jubilant is one that really stands out in terms of profitability and delivers that growth as well. And that's what really stands out for me within and stood out even within the City commentary.
So
for
yeah, so they
Jubilant.
met the numbers and everything, but this trend line, which and we're talking about a trend line here, we're not talking about whether it's a good strategy or not. Price corrections happen easily, but price revisions are difficult to happen in a market like this.
Yeah, and it's unfortunate that within the listed QSR pool, you've got a very, very select category. I
Yeah.
mean, it's just very shallow, the
Correct.
entire pool, and that's
Yes.
no benchmark to, so to speak, within the listed QSR space as to what really is happening in the QSR industry.
No,
but
sure,
anyway,
point
that
taken.
debate is for a later day or time. But Kunal, what stocks can one trade this morning? Should one trade because of the event volatility?
Yeah, of course. I think we should look to trade and sticking to large caps and the more formidable ones makes a lot of sense. Lupin is something which I'll highlight at current levels. That's a stock which has been doing reasonably well, as well as coming from the entire defensive pharma pack. We expect that the stock will probably try and perform very well over the near term. The volumes have improved. The stock has confirmed a swing breakout above the 2050 mark. So we'll look out for 2100, 2120 as a target for Lupin over the near term. And stop loss at 2020. And the second would be a buy on L&T Larsen. So that's another interesting name. Yesterday the stock managed to come back just slightly above the 4,000 mark. Even the last half an hour of volatility, the stock remained robust above the 4,000 level. So expecting a follow through up move. Buy with a target of 4,100 for L&T. Stop loss at 3,950.